Petty cash is an additional cash account that you could report either separately or have its balance included with other cash accounts when preparing a balance sheet. And company need to write a check for the amount and to designate on person for petty cash custodian. A petty cash fund is a quantity of cash kept on hand to pay for minor expense. Its operation will involve the following three activities. Firstly, a petty cash fund is established by writing a check for the amount of the fund, cashing the check and placing the cash under the care of an employee designated as custodian. A journal entry is then made to record the establishment of the fund. Secondly, after the fund is established, the cash is used to pay for qualifying expenditures. Payments are usually made in one of two ways. Cash can be taken from the fund to make payment, or employees can seek reimbursement from the fund for payments they have personally made. Thirdly, replenishing the fund. That means petty cash custodian requests and receives cash from the company's regular checking account in order to have the cash on hand equal to the amount reported in the general ledger account. The remaining cash in the fund is counted, and the company cashes a check for the amount that brings the total cash in the fund back to the original balance. Now, let me show an example from textbook. Suppose that on the 1st of May, Barnett Design Group cashes a $100 check to establish a petty cash fund and gives the cash to Tran. Then, the receipts in the fund are then used as documentation for recording expenses. Example: suppose that on the 31st of May, Tran examines the petty cash fund and prepares the following report. Thank you for your listening.